Hi, my name is Bob Lee. I'm a co-founder of Encoda. We write software that greatly enhances the effectiveness of existing billing systems, bypasses clearinghouses, and connects your system directly to payers, integrating all of the events and states that occur outside your billing system now, and integrates them into a single database which then you use for all business intelligence, all exception management, and all back office processes. This is a slide that deals with case study number 1, the first client that we installed. There is a case study 2, case study 3, and then there is a presentation that discusses what it is about the current model of business of back practice management systems and clearinghouses, what I call split systems, that is structurally designed to hurt you, actually. Gartner has stated, Gartner is a research organization, they have stated that medical practices spend about 14% of their revenue on IT and billing. And for that, they wind up leaving about 15% of the money on the table. Our system addresses this. It addresses both the 14%, reduces that significantly, and it also addresses the money that's left on the table. So this is business case number 1. Business case number 1 is a 128 physician pediatric practice. When we were employed by them, actually 10 years before. We had sold them their original medical manager system, and then in 1998 I had sold Lead Data Systems to Medical Manager and WebMD. At that point, the CEO took the business away from Medical Manager and the Medical Manager vendors and his own staff, and he formed a very large MSO. It was located in Florida, and convinced a lot of doctors to join it. There were hundreds of doctors in it, and about 4 or 5 years later, as he sought these economies of scale by adding doctors, he wound up in deep weeds, and called me up and asked me to rescue him, and we did. So this is the story of what happened. So this is an overview of the first 20 months. As you can see on the left, they grew from 128 docs to 188, which is an increase of 60 or 47%, and yet they grew from 47 million to 90 million, $43 million increase, which is 91%, which resulted in the average gross revenue of the physicians increasing 30%, or 367 to 478. We discovered in their system that there were 87,000 line items or claims, I can't remember which it was, that totaled $11 million in billed charges, and the only thing that the practice management system knew was that they were marked billed, because this practice management system, as almost all practice management systems, as data, has only a shameful minority of all of the states and events that you would want to capture. It knows the data posting and the data servers, and of course it knows CPTs and ICD-9s, and then it knows the date that the system marked it billed. It doesn't know what happened to it after that. The next thing that these systems will know in terms of data, and I'm not talking about being able to look on a screen and read something, that's text. It's no different from reading War and Peace, that's not data. Data is actionable. Data, you can make book on it, you can perform actions based upon it, you can make decisions, your computer can make decisions, that's data. So what we found is that these systems really don't know much of anything until you either make a payment or an adjustment as a result of an EOB, or you don't do anything. And then if you don't do anything, what happens? Well, it winds up on the accounts receivable aging report 90 days later, and then somebody calls the payer, and the payer says that they didn't get it. And you say, well, you must have gotten it. And they say, prove it, and you can't prove it. We found when we started writing our software to these new HIPAA standards, in which there is not just sending a claim to a payer, but the payer within sometimes 5 minutes, no more than 24 hours, must acknowledge with a data file stating that they've received the claim file you sent them. And our system saves all of these things, saves the claim file it was in as a file, as data, saves the file in which they acknowledge these things or reject these things. And then there's another intermediate response, which is called a 277, and our system captures that as data. But all of this stuff was never captured as data, and when the payer said they didn't get it, the practice wound up getting a settlement on that $11 million. This is the CBO stat slide. While we were doing all of this, you can see that they went from 75 people in their CBO to 30. Now, these people weren't laid off. It's a large practice, and actually our system has never caused anybody to be laid off. What happens is there are all sorts of very important things in significant sized medical practices that aren't being done because all of the insignificant things, all of the toil, what doctors call, I think it's called scut work, has to be done. And so these people toil like Sisyphus, rolling a rock up a hill, and trying to use the tools that they have at their disposal to achieve a different result from what the tool can achieve. Once you put in intelligent systems in the back office, these people are freed to do the better things, the more productive things. So they wound up creating a best practice team that would go from care center to care center and advise the people at the front desk on data capturing issues and database administration, and they created a credentialing department. And there's no lack of work in a back office, unfortunately, because of all the rote clerical stuff that the clerks are being forced to do. There's no time to do the important stuff, and there's no money. So what happened is we went from 75 to 30 people in the back office, a significant chunk of change, and they went from 0.6 FTEs, full-time equivalent, to 0.16 per physician. Now, their system, they had electronic payment posting, but they couldn't use it because they had the 36 data sets, and they were all the same tax ID, and this billing system needed to see different tax IDs and different data sets. So it didn't know where to post it. It tried to post it all into one data set. Naturally, that the patients weren't there. All the patients were spread out across the data set, so they couldn't use the electronic payment posting. So it was taking them 42 days to post payments into the billing system. Of course, once they got our system, by the way, comes with its own payment poster. Our system posts into your billing system data. It does not use your billing system. It uses your billing system data, just like your billing system uses the billing system data. So we have 31 patent claims on what we do. We know exactly what line item is being referred to by every response from the payer. And that is one of the patent pending issues. We don't care if they've changed upcoded, downcoded, they've changed bundling, unbundling, they've changed the account number, the name, the insurance company, none of it. We know physically where that record is. So we went from 42 days of delay down to same day. Now, this is the summary impact that the doctor who is in charge of IT in this practice and MSO stated was attributable to our system. The total practice revenue, $20.1 million a year. The time value in money in the days delay posting, $1.1 million a year. When they were able to reduce their staff by 40 people, that's a savings of 1.5. If they had kept those systems in place, kept those people in place, not saved this 1.5, and then hired 40 more people, it would have been 1.5 on top of this 1.5 that they wouldn't have saved. So the difference here would have been, you know, over $3 million. And the fact is that in manual systems, the bigger you get, the less efficient they get because of process controlling and whatnot. And I go into that in another presentation that deals with the problems with the existing systems and what our approach is to modern systems. But it's called Parkinson's Law, and it's widely accepted. The growth of work necessary to put out a single unit of whatever transaction you're doing, whether you're making widgets or you're providing medical care, that cost goes up per transaction, not down. And that is, by the way, why you know, the aggregation of medical practices back in the late 80s and early 90s in response to HMOs failed, and that's why the aggregation of practices today will fail, because the larger you get, the more expensive it gets, not the cheaper that it gets. In addition to which, there was this one-time settlement on the $11 million. So you can see we had a dramatic impact on that practice. If you would like further information on this case study or any case studies, please email us at sales@encoda.com or give us a buzz at 610-397-1632 extension 3, and we'd be happy to talk with you. Thank you very much.